86,000 downward revisions for June and July. What, in your estimation, then, will be the final number for August?
Well, August sometimes comes in below what it is then revised up towards. That's been kind of a pattern, so we may do a little better on that. But that's one of the reasons why you want to take a moving average of these numbers. If you look over the past 3 months, you're at 116,000 jobs per month. Now, that's definitely a downshift from where we were. We knew the job market was cooling. I think the important and operative question today, whether you're a markets analyst or whether you're trying to figure out where the macroeconomy is going, is what's the break-even level of job gains from the payrolls? That is, what is the level consistent with a stable unemployment rate? Well, we know that unemployment ticked down 1/10 in August. That was good to see. And I've seen break-even rates that basically range from 100K to 200K. I'd say right now, probably the trend in payrolls is at the lower end of the break-even range, but it's not outside that band yet.
Okay, so if you don't think it's outside the band of what would be considered normal, perhaps not reason to be gravely concerned, Jared, are you concerned? And I'm not going to ask you what you actually think the Fed will do in 2 weeks' time, but if they do opt for a larger rate cut, are you worried that might send a signal that the economic circumstances the country finds itself in currently are more dire than the picture you actually see?
No, I wouldn't. I mean, I think if we think about the economic conditions of the country starting from the top down, we look at GDP growth. Okay, so GDP growth in Q2, 3%. In Q3, the current quarter, we're tracking north of 2%. Think of trend at maybe around 2, maybe a little bit below. So that's a half a year with GDP at or above trend. We have, as I said, I think job growth that has been consistently solid, slowing, yes, but still probably within the band of what are credible break-even levels. That would be enough to keep the unemployment rate moving down. And in fact, that's what we saw in August. Of course, it ticked down. Strong labor supply, as Julie, as Acting Secretary Sue said, but also rising real wages. That's one of the reasons why consumer spending has been so solid. 17 months in a row of year-over-year price inflation growth beating price growth. And that's a big, and that kind of takes you down to the macro level of the paycheck with more buying power.